Good morning, everyone. My name is Christine Pham, Program Manager of the Small Business Development Department. I'd like to welcome you this morning to our Business Incentive Credits webinar. With that said, I want to welcome Ashley Oliverio, who will be presenting first this morning. Welcome, Ashley, and thank you for your team's participation and your participation in putting together this webinar. Please go ahead and introduce yourself.
Yeah, no audio.
Ashley, sorry to interrupt you, but we can't hear you right now.
Good morning. Can you hear me now?
Yes.
Can you guys hear me now? I'm
Yes.
sorry about that.
No worries. Go ahead.
Good morning, All right. Good morning, everyone. I'm so happy to be here. It's a pleasure to be with you all. Today, I actually would like to start off with a story. One day, there was a man and he was walking along the beach when he noticed a boy picking up starfish. Approaching the boy, he said, "What are you doing?" The boy replied, "I'm picking up starfish and throwing them into the ocean. See, the sun is rising and the tide is going out. If I don't, they will die." The man laughed to himself and said, "There are too many starfish on this beach for you to possibly make a difference." After listening politely, the boy bent down, he picked up another starfish and threw it into the ocean. Turning to the man, he said, "I made a difference to that one." You know, we have the privilege and honor to help one business at a time, making a difference for every single one of them. And we hope to enlighten you today and educate you on things that you didn't know until today. We ask employers all the time, are you getting the cash incentives and rebates that you're entitled to? And even if you think you are, the answer is probably no. So we always followed up with, if the government was holding a large check with your name on it, when would you want to know about that? And as you can imagine, well, most business owners would say right now. According to many financial publications, Fox, Forbes Business, Bloomberg, and other studies, they all agree only 5% of eligible businesses claim what they're entitled to. It means that 95% are unclaimed every year. And the government allocates $90 billion every year. And yes, only 5% ever claim what they're entitled to. And these are eligible businesses, not the ones that may qualify or might, but these are the ones that are qualified. I'm going to give you a little bit of history. Back in the late 70s and early 80s, our economy was in bad shape. I'm sure a lot of you are too young to even remember that. But in 1981, under President Reagan, he decided that he needed to do something and stop the hemorrhaging. So many jobs were going overseas. And so they started passing favorable laws. But at this time, it was limited by the business size and type. So if you weren't large enough or if you weren't the right industry, you wouldn't qualify at all. But they were so favorable and effective that these laws were passed year and year again. And then in 2016, with Obama, under the PATH Act, two things happened. It was made permanent part of the tax code, and it expanded to include most business types. And then in 2018, under Trump and the tax overhaul, it expanded even further. So these incentive programs have been enjoyed overwhelmingly bipartisan support for nearly actually 40 years now. And still, most business owners are not hearing about it. And it's not that there hasn't been articles throughout the years. Many have been written Whether it's Wall Street Journal, Bloomberg, Fox, many have been written throughout the years. Another thing, a lot of business owners are believing myths. This Forbes 2013, 8 myths that prevent business owners from claiming the R&D tax credit. Number 1, the R&D tax credit is only for companies inventing something brand new. That is not true. Number 2, you must have white coats, labs, test tubes. Again, that is false. That is not true. Number 3, the R&D tax credit is not for my industry. And this is part of the problem. Most businesses will self-censor themselves. They think, you know what, I don't qualify. They don't even look at it when there's no cost to even find out. Number 4, only for big companies. That's not true. We've helped businesses in all sizes, mid-size, small. We've even helped business owners with even just 1 employee. Number 5, it won't help with my state tax. Well, they are actually, California has the R&D tax credit, as well as many others are looking into creating one or expanding it. Number 6, it won't help with my bottom line. Well, this is not a deduction, it is a credit. A deduction reduces your taxable income, and a credit reduces your taxes dollar for dollar. So yes, if you qualify, it directly affects the tax liability you're required to pay. Number 7, it's too good to be true. It must be snake oil. What you saw on the timeline, it is a part of the Internal Revenue Code. It's actually Section 41 of the tax code. Number 8, it is going to go away with tax reform. Well, I love this part of the article. Bless your heart. The R&D tax credit is a close third to motherhood and apple pie when it comes to support in Washington. The R&D tax credit, I like to say, again, this article was written in 2013 on a bipartisan basis in both houses by the Obama administration. And not just that, but all previous back to 1981. And this part was prophetic. Most experts predict it will stay in place even with tax reform. And in fact, it would be expanded, in which it was. So this article was done by CBS News. 60 of America's biggest companies paid no federal income tax in 2018. In this, they also highlighted Amazon and Netflix. Amazon not only paid no taxes, they received $419 million. Yes, $419 million in tax credits. But these tax credits, they're not just for these big mega corporations. These tax laws, they're also available to your business, and regardless of size. So why haven't I heard about this? Well, you do need to know who to ask, why to ask, and how much to ask for. And that's where we come in. This is a specialty. It's a niche area that we work in. And that's where we come in. We are the conduit between these government programs and the small to mid-sized business like yours. Now, we have helped thousands of clients. This is a snapshot of just some of our clients that we've helped. Please take a look at the different industries we've helped: advertising, agriculture, auto mechanic shops, manufacturing, different trades, different medical fields, flooring, food processing, funeral homes, trucking businesses, different marketing agencies, and so many more. And I also want you to take a look at the dollar amount. We've helped businesses locate a few thousand well into 6 figures. And we're typically recovering 1 to 2% of gross annual revenue, retroactive 3 years. And I also want to add that we also help all their credits go up to 20 years. So we can, every time you file after you do your taxes, we can see if there is credits available for your business. And the one thing to note about all of our clients, every single one of them, they did not know that this money was theirs to claim. So US Senator Chuck Grassley was speaking at a small business conference, and this is what he said. Business owners learn about the tax incentives meant for you. But what worries me is that many of you here, business owners and accountants, too often think that these tax incentives, that they're just happen for big corporations. What I want to impress on you that nothing could be further from the truth. Are you concerned about the money that you're paying, the taxes that you pay? Using proven IRS rules, we can help you put a large portion back into your pockets. We have located millions of dollars in government incentives for business owners across the country, tax-free, plus interest and no strings attached. Take advantage of our no cost, no obligation feasibility study. And I like to leave you here with a testimonial from a client of ours right here in San Diego.
Hi, my name is Anne Marie, and I own and operate Postal Connections in Claremont. I met Ashley a while ago. We were part of a business networking group together. And she told me a little bit about her product and what she does. We met one-on-one and got to know each other. And it sounded interesting, it sounded good, but I was deterred by a couple different things. I am a card-carrying skeptic, and I live by the adage, if it's too good to be true, it probably is. And I'm a small business. I have 2 employees, and so there's just 3 of us working here. We're not pulling in millions and millions of dollars a year, and we don't do any kind of high-tech manufacturing or anything like that my brain kind of associated with this. So I kind of didn't do anything. But I got to know Ashley, and as I got to her, I realized she is a genuine, loving person, and she has a lot of integrity with what she does. So I thought, I may not necessarily trust what this industry is, but I trust Ashley, and I trust that she's got my best interest at heart. So I spoke to her and said, hey, maybe let's talk and see if we can move forward. So we did. She took a little evaluation of my business, and then that was followed up with a more in-depth phone call. So I had this number in my head that I was imagining. It would be nice if we got X number. It was a pretty conservative number. So they came back, and that number was 9 times my original number. So now I'm like through the roof. This is amazing. 5 months later, I started getting money back from the state. I got 3 checks for the last 3 years in tax returns. Come back. Started to get excited. This is something real. This works. I talked to my accountant, and he says, yeah, this is all legit. There's no problems with the taxes. Yay. So I waited a little bit longer, and COVID slowed the IRS down, but I gotten 2 of the 3 checks back from the IRS. And when I'm done with my 2020 taxes, I'll be talking to Ashley again about looking at those. So my request to you is, if you're a little skeptical, if you're a little worried that this is something that's legitimate and you're not being scammed out of your money, get to know Ashley. Don't worry about the business she has. Get to know her as a person. Betting on Ashley is a pretty safe bet. So she's done a lot for my business, and I really think whoever you are, she can do a lot for yours.
Hi, my name is Jim Saunier. I'm the National Sales Director with Business Incentive Credits. What we're going to talk about now are frequently asked questions. First question that we usually get, it sounds too good to be true. And that is a good question. Is, look, this sounds too good to be true. Is this real? Well, when the government gives you something, there's always a motive behind it. If you qualify, it's because you've proven to be a successful business, kind of business that makes our economy grow and our economic future brighter. Stop and think about this as a small business owner. If you receive $30,000, $50,000, $100,000 or more, you may be able to buy another piece of equipment. When you do, the equipment manufacturer makes a profit, and it trickles down to the employees who pay taxes. That new piece of equipment you buy may help your business grow as well. When the business grows, taxes increase as well. You may be able to increase salaries or hire additional employees. Taking someone off of unemployment, welfare, food stamps. The lower the unemployment rate and the fewer people on welfare and food stamps, the better it is for the entire country. Bottom line, as a business prospers, so do income taxes. So the government thinks it's a good investment to hand out this money to responsible and successful business owners like you. Let me give you an example of a waste management company that I worked with. They received a considerable amount of incentive dollars. He told me he was able to purchase much needed new equipment, which helped his business grow even more. The next year, he paid quite a bit in taxes, and we got him even more money back. Another example is a few years ago, a body shop owner, who is also a very good friend, told me he thought it sounded too good to be true. And his wife was on board with him. She was very skeptical. However, they said they would give it a go because they've known me for years and they trusted me. Not only did they receive refunds from 3 years back, retroactive, but they have received refunds every year since. Moving on to the next question. Why didn't my CPA tell me about this? Isn't that what I'm paying my CPA to do? Well, your CPA wants to make sure that you are compliant with the IRS codes. Whatever information you give the CPA, he puts on the application. Your accountant is similar to a primary care physician. Your family doctor knows your body from head to toe. But if you needed open heart surgery, your physician is smart enough to refer you to a heart surgeon. The heart surgeon has the tools, the skills, and the day-to-day expertise to perform this specialized surgery that you need. The CPAs we talk to tell us they don't have the time or resources to research all the government programs available. Remember, they're keeping you compliant. So they, like the primary care physician, outsource that to our CPAs. Example, I approached a good friend of mine who's an orthopedic surgeon concerning incentives for his practice. He spoke to his CPA about it and was told he knew nothing about incentives and maybe he should hold off on this. Once again, because he knew and trusted me, he decided to submit an application. He received quite a sum of money from the IRS, and this has turned his CPA into a believer who is now referring other clients to us. Another question that is asked quite a bit is, will I be audited? Best way to answer that question is we have never had one of our clients audited, not one. But that does not mean that the IRS can't or won't audit. They can audit anyone at any time. But remember, this is an application process. Our forensic CPAs will go over your returns with a fine-tooth comb. They want to ensure that you are compliant and that there are no red flags. This is done before they go through the tedious process of amending the returns to apply for incentives. Once the IRS gets the amended returns, they will closely review all of this information on the application for weeks. They make sure all the I's are dotted and the T's are crossed. When they issue a check, they have carefully examined every aspect of your application. So why would they then ask for an audit? They would literally be auditing their own examination of the amended returns. Another question is, what if I'm audited? Will your company defend me to the IRS? If there is any state or federal question or audit, anything like that, as a result of our work on preparing your credits, our CPAs will defend their work on your behalf. Our CPAs will not jeopardize their careers by signing any tax returns they prepared unless they are 100% certain of the validity of your refunds. Next question is, how much time will this take? Well, let me answer that question with a question. How long does it take your business to make a net profit of $25,000 or more? Would it be worth your time to spend 30 to 45 minutes to find out if the government has a check in the amount of $30,000 or more waiting for you to apply for it? Many of our clients have a CFO or office manager that takes care of the application because they know the business inside and out, thereby freeing up their time. The normal application process takes no more than 30 to 45 minutes. And that pretty much answers the most frequently asked questions. I'd like to now introduce you to Barry Herring, the owner of Business Incentive Credits.
Hi, I'm Barry Herring. I'm the Executive Director of Business Incentive Credits, and my portion of the presentation is to discuss what qualifies a business for these tax incentives. And I'll give a few case studies as well. So I think in my mind, I'm kind of a picture thinker, a visual type person. So in my mind, the best way to describe how a business might qualify is through just a simple illustration. So follow me here. The first qualifier is the amount of taxes that a business generates. The income taxes that a business generates represents the depth of the well. You have some businesses that generate, they're very profitable. The good news is very profitable. The bad news is with profits come taxes, right? So when they're very, very profitable, then it generates a lot of taxes. So they have a very deep well. And then we have other businesses that are profitable, but not so much, or maybe they have a lot of deductions on their Schedule 1040s, and it reduces their tax liability. If it's a C Corp, then it's the C Corp that generates the profits, and it's a C Corp that pays the taxes on it. If it's an S Corp or an LLC, which is what we see most of the time, then the profits and the taxes pass through, because it's a pass-through entity, it passes through to that individual, either the owner or the owners, if there's more than one partner. So the taxes that are paid, that represents the well. And then as you want to go down into the well, now I've got a well in my back of my house, and we don't use a bucket, thankfully. We use a pump, but in this illustration, we'll use a bucket. So let's say this, since we're talking about reaching down into the tax well to draw out tax credits, the second qualifier is the size of the bucket we can use to draw tax dollars out of the well. The bigger the bucket, the more tax dollars and the more lost profits we can recover. So the bucket represents qualified research activities. What does the business do? And what are the activities within the business that qualify according to the IRS rulings? And then what expenses are generated by those activities? For example, W-2 expenses. What do you pay the people who perform these activities within your business? Supplies, what supplies does it take that qualifies you in these activities? Activities usually cost money and require supplies. So what supplies do you need? And you may even hire out third-party contractors. And if you do, of those third-party contractors, the IRS says that you can use 65% of what you paid someone else to do that qualifies. This 65% of those dollars can go into the calculations to see whether or not you qualify. So qualified research activities, that's QRA, qualified research expenses. So we want to know, what does the business do, what the business does, and what the business spends. That's the bucket. And we also want to know, what income taxes does the business generate? That's the well, if you will. Deep well, shallow well, medium well. In fact, that's what we look at actually almost every day. We have scenarios that we see daily, and we'll show you some of these case studies in just a minute. But we have clients that have a very deep well, a very large bucket. They paid a lot of taxes, and they do a lot of the activities and the expenses that qualify for them for these credits. So the result for them is a very large refund. Again, large well, large bucket, or deep well, large bucket equals a large refund. We have some that have a very deep well. They paid a lot of taxes in, but what they do within the business and the expenditures that they made to qualify those research activities weren't very big. So the bucket was small. In those cases, even though the taxes paid were large, it might be a very small refund, or sometimes there's no refunds because there's just not enough qualified research activities to warrant pulling anything out of that well, out of those taxes. We have some that have a shallow well, paid very few taxes. We have some that I was talking to a gentleman one time, and he's in the medical area, and I said, so do you pay a lot of taxes? And he kind of looked up, and he was on a Zoom, and he looked up and he rolled his eyes. He said, boy, do I. And then when we got his tax documents and we looked at them, realized he only paid about, over a 3-year period, only paid in about $6,000. So he really didn't. It was a lot to him, and I get it. $6,000 is a lot, but it's not a lot when it comes to this tax well. So if it's a shallow well, even if you've got a large bucket, it's hard to scrape the bottom and get dollars out. There might be little refunds, even no refunds. And if sometimes we have to send a letter out to the client and say, I'm sorry, but because you didn't have the qualified activities, or in most cases, because you didn't have enough taxes paid in that, we're not able to help you at this time. However, let us know next year when you file your taxes next year and see if that has changed. In fact, we've had businesses that were not qualified because the tax well was not deep enough 1 year, and then we can go 3 years. So we removed the bottom year and added the next year, and they did qualify. So I tell people it's never a no, but sometimes it's a not yet. Okay. And then sometimes there's shallow well, small buckets, not much we can do there. If you didn't pay much taxes and you don't do much qualifying activities, then there's typically no refund. Sometimes it's just in the middle, medium well, medium bucket. Our average last year was just over $50,000 per client. So that would be the medium well and the medium bucket, the medium refunds, and then so on. We can make all kinds of comparisons here and go so on and so on. And so some people will ask, will it work for me? That's the biggest question once we have someone's attention and say, hey, let's look at this. Will it work for me? It doesn't cost anything, no cost, no obligation to find out. And so it boils down to two simple things. How deep is your well, and how big is your bucket? Well, let's talk about the bucket for just a minute. Which statements are true of your business? What I'd like for you to do is just check in your mind, check off all of these that apply. And we do have a sheet that you could email Ashley. Her email address has already been on the screen. It'll come on the screen again in just a minute. You could email her and say, would you send me one of those checklists? And she can do that. So in the last 4 years, and we ask clients a lot, business owners a lot, what are you doing today that's different than you did 3, 4, 5 years ago? What changes has there been within your business? Well, very few businesses we come up with and say, we're doing everything exactly the same that we did 20 years ago. Well, if you are, then your qualified research activities and expenses are probably low. Your bucket's probably small, so we're probably not going to be able to help you. But most businesses have changed a great deal, especially with the expanding technologies. Most businesses have changed significantly in the last 3, 4, 5 years. So in the last 3 or 4 years, check these off in your mind. Have you paid federal or state income taxes if you're in an income tax state? There's about 30, 37 of them, I think. Yeah, have you paid federal or state income taxes in any of the past 3 years? And if that would equal total, not yearly, but total $50,000 or more total paid in. Number two, custom design solutions for your clients. Do you pull things off the shelf and give them to your client? Or do you look at each client and each client being different and you have to go through a series of evaluations and choosing alternatives for that particular client? And what percentage of your time is done with that? Have you experimented with tested new concepts, new materials, new supplies, new chemicals? Do you outsource to a third party? We mentioned the third party a minute ago that is counted towards your expenses. Do you outsource a third party for any custom orders, custom work, custom designs? Have you designed or evaluated alternatives for products, for processing, for streamlining, for the environment? That's obviously a big thing nowadays. Have you developed, designed, or modified or improved your products? You making the same products? The process that you go through, the formula that you go through. I have a client that's, I don't want to get too specific here, but they make septic tanks, okay, for typically rural areas, and they had to they had a they were having a 60% loss rate because when they pull the concrete out of the forms, it would crack or break and you couldn't use it. So they said, we've got to fix that. It's too much of a breakage. And they changed their mold. They injected some compound into their mold. So when they pulled it out, it was stronger. And they went down from a 60% to a 2% breakage. So that's the kind of things that the IRS is looking for. What are you doing to change? Have you changed your process? You streamline your products, your processes, your formula. Number 7, has a wholesale component to your business. Do you have a wholesale component or do you use third-party contractors? Do you perform any training for yourself or your team via the internet? Not just training, but how much do you use the internet in your business? I have one gentleman in the medical realm. They have facial recognition software, and as soon as a patient walks in the building, it recognizes their face and it pulls up their information on for the assistant that's sitting up front. It pulls up everything that they have, everything that they need, and he said that alone has doubled the amount of traffic that they could have in their practice, just because of that split second instead of going to the counter, giving them the name, and all of that. So that kind of technology is important when it comes to the qualified research activities and expenses. So number 9, have you performed any certification or environmental testing, regardless of the outcome? And this is important. You say, well, we tried that, and we tried that, and we tried that, didn't work. The IRS says, don't care. It doesn't have to work. If you tried it, if you experimented, if you looked at alternatives, if you eliminated the risk and the outcome, if you're looking for the outcome and you use different options to do that, even if it didn't work, it still counts towards the expenses that you put out on that. Number 10, have you improved or upgraded your website, your computer, your communication system? Have you initiated any type of problem solving in the field, on site, using a computer? Have you changed your end product rather than kind of mentioned this a while ago, rather than making the same product exactly the same way? Have you made technical improvements to your business? Maybe an e-commerce that popped up on your website, or security. We have to be extremely careful about cybersecurity nowadays, especially we've seen things in the news in just the last few days. So have you done something like that within your business that would qualify you for these activities? You're improving your business. Sometimes if you have trucks that go out, let's say, you may GPS those trucks, and the GPS will say, okay, this is the best route to save money, because money, when you're out on the road, the dollars for the gas, the dollars for the time spent, if you can save time and reduce the hours spent, you're saving money. So we can use technology to do that as well. Number 14, have you changed your process? Have you changed your procedure that results in a cleaner, quicker, greener, or cheaper outcome. That's one of the qualifications. And the last one, have you tested or maybe had tested new materials, processes, or concepts to eliminate uncertainty and risk? Now, if in your mind you checked at least 3 of these boxes, you are probably entitled to federal and or state cash incentives, cash dollars back in your pocket. And that includes retroactive funds with interest. We go back again 3 years, so we can pick up 3 years of your past 3 open tax years, they're called, and we can go back and see what you missed out on those particular 3 years. So we just tell people, stop losing money. It's just not a good thing. Those some quick case studies. I'm not going to bore you with a lot of numbers, but I think these are interesting. This was a construction company, an S Corp, 210 employees in the northeastern part of the United States. It was a single owner, about a $20 million a year company, and the federal returns that they received, 2016, 95,378. In 2017, 185,000. In 218, 242,000. Grand total for them, $523,635. Now that's a $500,000 they never knew about until we contacted them. They never knew about. And at the bottom there, you're going to hear me say this several times because I want you to just to be indelible in your mind. Those dollars came tax free. We said, how can it be tax free? Well, it's your money. You overpaid the taxes. You overpaid your taxes. You overpaid the IRS, in this case, by $523,635. Think of it this way. If you owe the IRS, you think they're going to ask for some interest on what you owed them? You better believe they will, right? Well, it's just reversed. The IRS says, we owe you, from 2016, we owe you $95,378. And not only do we owe you that, but we owe you interest compounded from that tax year to today. And we've got people that get as excited about the IRS paying them interest as they do their tax refunds by itself. So tax-free plus interest, no strings attached. And we'll speak to the no strings in just a minute. So another case study. This is a auto body collision. It's an LLC, 14 employees, southern part of the United States. It's a single owner, about $2.6 million business per year. The federal refunds, a lot of years here, so I've kind of put them side by side. In 2014, not huge, $4,300. 2015, $2,700. 2016, $19,000. And then 17, $24,000. 18, $27,000. 2019, $22,000. So over this 6-year period, this body shop collected $100,563 tax-free plus interest, no strings attached. He's a happy camper. Another case study. This is some audiologists. This is a 2-partner team. It's an S Corp, 45 employees, 3 offices, I believe in 2 separate states in the southern part of the United States. About $2 million a year is what they generate. Their federal refunds for partner 1 in 2016, $44,000. Partner 2 was $10,000. By the way, this is kind of a junior senior partnership. That's why you see a big disparity in the differences here. 2017, $40,000 and $13,000 for partner 2. Partner 1 in 2018, $13,005. 2018 for partner 2, $11,007. So a total for partner 1, the senior partner, $98,161, and partner 2, $35,755. That means that between the 2 of these partners generated within this business, they qualified for $133,916, tax-free plus interest, no strings attached. The next one is a construction company. We do a lot of construction, a lot of contractors, whether it's electrical, roofing, general contractors, do a lot of construction companies. This one is an S Corp. It's 9 employees. And for those of you out in California, this will be important. It's a California company, 1 owner, it's not a large company, about $800,000 per year in annual revenue. The federal refunds, because you get federal and state in California, 2016, $6,400, California state, $719. 2017, $3,300 and $663. 2018, $18,005 and $2,800, for a total for this business, $32,500 $511. That's a little low. It's a little lower than our average of 50,000, but I can promise you, having spoken to these folks, I know they're really thrilled at getting $32,511, and it came tax-free, and guess what? Plus interest, and guess what? No strings attached. Another case study quickly, trucking and transport, two partners, 7 employees, $5.5 million company. Partner one, I'm just going to scroll down here quickly for 2015, 16, 17, and 18, and 19. The total for this partner one, $137,127. Partner two, this is about a 51-49% partnership as I recall. And partner two, 2000 for federal and state. And notice in 2015, it's 0. And that's because for that year, that well was low. Okay, the qualified activity, the bucket was there. The bucket was large enough because partner one qualified in 2015, but in 2015 for partner two, not a lot of taxes paid, maybe a lot of deductions that year. So on their personal 1040, not a lot of taxes were paid, therefore the well was low. California refunds though that year, 11,000 is 245. They work and have different criteria that they look at. 2016, 2017, 2018, and 2019. A grand total for this partner, this second partner, $117,853. And between the two of them, about $250,000 between these two partners, and it came tax-free plus interest, no strings attached. Now I'll divert a little bit here to a negative case study. So forgive me if it's for getting negative. This was a construction company, an S Corp, 75 employees, northeastern part of the United States, a single owner, a $30 million company. This is a large company. The federal refunds that this business would have qualified for, because I've gotten pretty good at just looking at something and kind of telling you where we're going to go. So somewhere between, for 2016, somewhere between $250,000 and $350,000 this company would have qualified for. However, the owner said, gee, I don't know, let me think about it. Well, he thought about it until 36 months had passed from the time that he filed his 2016 taxes, and it expired. This is an IRS rule, 36 months, not 36 months in one day, it's 36 months. So if you file your taxes on time, March, April, you've got 36 months from that time to file for your credits, or they expire, never to be received again. They're gone. So in 2017, same thing, would have qualified somewhere between 250 and 350,000. And honestly, I'm being conservative here. I think it could easily have been 400 to 500,000. So this is a conservative number. It expired this year about a month ago because the 36-month rule kicked in. And unfortunately, this gentleman was not able to take advantage of 2017 because he said, let me think about it. He did think about it, but thinking about it cost him, in my estimation, and again, conservative, somewhere between $500,000 to $700,000. So I don't want to end on a negative note. Let me do one more case study. A manufacturing company, a C Corp, 54 employees in the southern part of the United States. This is a one owner, $13 million company, and the federal refunds, they have their tax year is based, their fiscal year, fiscal financial year is based on September the 30th is their year. So we got 2018, 2019, 2020, and a grand total for this company, $223,245, tax-free plus interest, no strings attached. Let me say these dollars come directly to you. Sometimes people ask us, well, do you get the checks from the government and you send them to us? No, they come directly to you. If it's a C Corp, it's got the name of the company written on it. If it's an S Corp, it has the name of the owner. And if it's a joint return on that 1040, it'll be the owner and the spouse. So his and hers, Bill and Mary. But it comes directly to you. And they come, as I think you might have heard me say before, tax-free plus interest and no strings attached. So let me talk about the no strings attached. What would you, if you were average with our average and say $50,000, what would you use that $50,000 for? Well, I have one client who they got in about 53 to 55. I can't remember exactly, 53 to $55,000. And she told me, the owner, husband and wife owner, and she told me, she said, we're going to buy a sailboat and we're going to name it after you. Well, they didn't name it after me, but they bought a sailboat. She sent me some pictures the other day and was thrilled that it's brand new. They've never sailed before, so they're learning. It's an awesome thing for them. So they bought, with their money, a sailboat. Another one of my clients, he needed a new truck. Now this is, the refunds came to him. This is his truck. It's not a company truck, but he uses it, I'm sure, for his business because he's all over the place. He's a contractor. So he bought a new truck. I was talking to one of our clients the other day, not long ago, and he just got another refund check in, and so we talked about that, and I was congratulating him, and he said, "Oh, by the way, I'm remodeling my kitchen, and guess what I'm using to pay for it? Tax-free plus interest, no strings attached." What would you use the money for? I don't know. We've had some people that would use it to put their kids, their grandkids through college, various things. It doesn't matter. It's your money to use as you see fit. So we want to have a little question and answer time, and I think there's a chat there that you can put your questions in. But there are two questions that we cannot answer today, so I want to deal with those up front. Two questions we can't answer. Number one, can you give me the business owners' names and contact information so I can call them? Well, let me ask you, would you want 5 or 6 or 10 people calling you every day saying, hey, did this work for you? Tell me about this thing. Did it work? How much money did you get? You don't want that. They don't want that. We've had a number of people that have filled out or have sent us a letter, a testimonial letter. On that letter, they put their name, their business name, and it's got their phone numbers and so forth. So, I mean, they've invited that. Yes, you can contact me. They were so excited about it. But as far as giving you names, hey, tell me about somebody, can't do that. We're very confidential unless we have some kind of permission from that client. And the second thing we can't answer today in our Q&A is, what about my business? Will I qualify? And our question to you is going to be, how deep is your well? How big is your bucket, right? Because we want to know what kind of taxes you paid in, and we want to know, what do you do in that business that qualifies you for that? So Ashley, I believe you're looking at if we have some questions in the chat box, what questions do you have? And type into the chat area any questions that you might have.
Okay. So we do have two. Let me give you the first one. It says, could you discuss how much of this applies to a consulting services business versus products, delivery, or production?
Well, it's a good question. It kind of goes to number 2 there. What about my business?
Yeah.
And, all I could say was it depends. We have consulting. One of our first clients back in the day was a consulting business, and that consulting business received $23,000. It wasn't a large consulting business, wasn't a large amount, but $23,000. And then we've had other consulting businesses along the way that have received. We have some that did not. In fact, Ashley, you just recently had a consulting business. Do you remember the number on that one? Was it like 50,000?
Yes, it was almost, it was about 44,000.
Okay, all right. So, I mean, yes, the answer is yes. Your consulting business may qualify. We don't know until we look at it, but it certainly could. And you're right. Most of the businesses are putting out product, whether it's a construction company, they're building a house, that's their product. If it's a roofer, they're putting on a roof, that's their product. If it's a dentist, then this is their product. What they do inside your mouth is a product. But consulting, you do have a product. You're probably using technology to do that. Maybe you're running computer programs and softwares and things, and you're consulting from that vantage point. So to answer the question, yeah, it could very well be. It has worked in the past, and it could work for you as well. So be a good opportunity to give Ashley a call. So another question?
Yes, I'll take the next question. The next one says, how much is the cost of our services? So we do not charge to see if you're eligible and to see how much. We would see first. And if you decided that you wanted to proceed, our fee is 33%. And when we do our work, we actually only charge half of that up front. Our work is also 100% money back guaranteed. So if we had an issue, if there was ever, we are 100% money back guaranteed.
Let me add to that. I like to answer a question sometimes with the question. So let me ask you this. If I came into your business every day and I handed you 3 crisp $100 bills, and all I asked you to do is hand me one of them back, how many days would you let me come into your business? And every time I asked that question, they said, well, every day. I said, what about weekends? Yeah, I'll show up on the weekend. What about Christmas? I'll be there for Christmas. If I give you 3 and you give me back 1, that means you keep 2. So basically, it's a one third fee, 2/3 you keep. And we have had, Ashley mentioned the money back guarantee. We've had to return that initial fee 3 times, 3 different types of reasons, but for 3 different times. And it's a guarantee. You don't, and if the IRS, this has happened, I mentioned the consulting that received 23,000. I think I got that figure right. What we submitted for was 25,000, and the IRS said, no, it should be 23. Okay. So on the back end, when that check came and the fee was paid on the back end, then we reduced the fee because now it's 20 based on 23,000, not 25. So if the IRS reduces it, if they deny it, then you get your money back. If they reduce the fee, reduce the refund, then you get that reduction on your fee on the back end. We actually had one. I've got one, and I still don't quite understand it, but I have one that received $28,000 more. When the IRS looked at it, looked at the application, they said you qualify for $28,000 more. And I told them, I said, I don't know where you're coming from, but for me, that's a God thing. And they said, yeah, that's a God thing. So the is refundable. Sometimes you get more. We've had that happen several times. 95% of the time, what we submit that application for, if you subtract the interest, remember plus interest, if you subtract the interest, then it is to the dollar what we submitted in for. So 95, really almost probably 98% of the time, it's right on the money. Okay, any other questions?
Let me just add to that 33% is only for the principal amount. We don't charge any percentage for the interest that you receive.
Right.
So the interest literally helps to pay for our fee. It
really does, yeah. And the tax deductibility of the fee, when you subtract that and subtract the interest, the fee, even though it sounds like 33% or a third, it's actually less than that when you base it on all the net result of what's else from it. Anybody else? Any other questions?
Yeah, there was another question, so we can elaborate more. It says, so if the firm doesn't get any refund back, do we still have to pay you? And if so, what is the fee? So we don't charge if there isn't a recovery. We will know what you are qualified for. And so we don't proceed unless we know there is a recovery.
Yeah, and just to reiterate what Ashley said in the beginning, there's no cost and no obligation. When we look at your well and your bucket, okay, how deep is your well, how big is your bucket? There's no cost or there's no obligation whatsoever. We look at that and we say, okay, if there's something there, if your well's deep enough or your bucket's big enough or a combination, then we say there's money there and we give you an estimate. It's between this amount and this amount. Jim recently had a client and the estimate was between $90,000 and $100,000. Well, when the paperwork was done, all the calculations were made, the research calculations and the documents were prepared. It was actually a little over 101,000. So it was outside the estimate. On the good side, it was more than we thought. Sometimes it's a little less than we thought, but usually it's within that estimate range that we give you. So basically we come back to you at that point. You haven't spent a dime yet. We come back to you at that point and we say, okay, we believe there's money there and we believe it's between this number and this number. Do you want to proceed? And if you do, then you simply sign a consulting agreement saying that you agree to the pricing and you agree to the fees, et cetera. We send that back to the CPA. CPA goes to work. There's usually a stack of paperwork about 2 inches thick that comes back to you for signatures and dates sent off to the IRS. Once that is sent off to the IRS, then the first part of that fee is due because all the work has been done. We just sit and wait now. And just let me say something about waiting right now with COVID. The IRS was shut down, virtually shut down for 3 or 4 months. So it takes longer now than it did back in the day, 4 to 6 months. We've had people receive their checks within 6 weeks. It's rare, but sometimes 6 to 8 weeks. That's not happening right now because of COVID, because they're backlogged and trying to catch up. But it's not it's not an if, it's a when. So it may take a little longer, but let me assure you of this. And I tell everybody this when they say, you know, where are we on, what's the status on my refund? I always say the good news is, the bad news is we got to wait. It's the IRS. We can't, there's no way that we can push a button and make them go faster. But what we can do is assure you that every day that goes by, the IRS is paying you interest on what they owe you. Every day that you wait on that refund, you're getting interest, okay? And it's not, in 2000, and there was an article last summer that the IRS is paying 5% interest. Now you show me where you can get a 5% interest on that seed money that you put in to start the process. How much, show me somebody that's paying 5% interest. Now for 2017 and 18, it's more like probably 3 to 4%, but even then, try getting that at a bank. So you may be waiting a little longer now because of COVID, but it's going to be worth it because you're number one, you're getting the refunds that you deserve. Number two, you're getting interest paid on that. Any other questions? Good questions.
I don't see any at this time.
Okay. Well, unless Jim or Ashley, anything you want to add that I might have left out?
Yeah, I think you did a pretty good job of covering that particular question.
Well, I would encourage you to write down Ashley's phone number, Ashley's email. I'm going to leave it up on the screen for just a second, and get in touch with her because she's in the San Diego area. She handles things out there for us, and we have consultants all over the country. But if you're listening to this is we want you to contact Ashley. She's done a great job, she's just a super lady. So no more questions, no more comments? All right, then I will turn it back over to the San Diego Airport team.
Thank you so much, Ashley, Barry, and Jim for that presentation. I hope everyone in attendance enjoyed that and you can benefit from all this information. Please take our survey. We will be sending that out and I'll also include it in the chat box. Thank you so much for your time and we look forward to seeing you in our future webinar. So stay tuned and keep your eyes and ears open for future events that we have. Thank you so much.